Good afternoon. Welcome to Green Bicep. This is week number 7. Let's rock and roll, folks. It's been another fun week. The Fed is sleeping. They're not sleeping at all. Quite the opposite. They're quite busy. The year of chop. So the S&P was down about 1%. Month to date, it's up 3%. And the Shanghai index was up 1.4% over the last week. And month to date, it's up about 2%. Powell spoke this last week. His body language, he was quite nervous. It was quite clear. And he basically, he changed his tone a bit, but the market liked what he had to say. I'm not going to pull, from my perspective, it's always been the same thing. And we'll get into more on that. So now we want to find strength and use that in this market. You buy strength. It's a good trading market, or you buy deep value plays. Generally, when interest rates are going up, the cost of capital means you got to discount future cash flows by a higher rate, and that makes growth companies that have a lot of debt less attractive. That generally is tech. So companies with debt you would want to avoid with a rise in interest rate environment or a high rate environment, because we're likely going to hold steady. So Michigan sentiment came in at 66.4. Actually, it was quite surprising. It's been up for quite a while, so I shouldn't be surprised because the trend's been up. Starts didn't get released. Shouldn't be there. The balance of trade, that was at $67.4 billion deficit, so increase so ultimately that means that typically your currency will weaken, and so we expect to see more of that. And then Friday, Chinese loan growth data came out and it was very positive. We'll look at those charts in a second. And retail sales ex autos came out. We have 2 months straight where it's been dropping, so we're starting to see weakness in the consumer. We got Michigan sentiment starting to turn up. So sentiment indicators are improving, but now all of a sudden sales dropped off. So business inventories ticked up too a bit. So but claims did come in low, so people still have a job at 196,000. So initial jobless claims, they filed the first time. This is what this reports every week. It's not continuing claims, which is an aggregate that's in the millions of unemployed people. So ultimately there's a lot of cross currents currently. The Fed has said they're going to hold rates steady for the year. They've been clear about that. We know that there are a lot of jobs. There's more jobs than people available for those in the United States, and so that's keeping the job market nice and tight. Well, overall, the economy is doing it extremely well considering the rates have gone up so much. So I'd be extremely bullish. It's just when the yield curve is inverted, historically, anytime, the way it works is rates go up, they start raising rates, and typically the market will run up. And I did a chart last week, and actually I kept it in here. And then once the cut happens, the market usually sells off. And that's just the pattern of it. And so, but given that it could take 2 years before the Fed cuts rates, or mid next year, because they're saying 5-1 this year, 4-1 next year, then 3-1. So 4-1 next year. So that means they're going to have to at some point drop rates. So is it going to be actually next year? It ultimately depends upon inflation. So 5-1, 4-1, 3-1, and that's per Ed Yardeni. So the new normal, I keep mentioning, is war, friction. I guess there's word that the Russians have amassed a lot more troops and they're going to push in. And that's just from one source. Then from another source, they also said something similar where they're planning larger-scale missiles, because Germany's provided more heavy-duty weapons. The U.S. Essentially got caught in a quagmire, or whatever you want to call it. But they got caught, at least this is what this person wrote about the bombing of the pipeline. That was around, I think it was close to when Liz Truss got fired from her job for no reason after 44 days. So the rumor was she leaked intel information. The Chinese picked that up. and it related to some sabotage of some Russian stuff. So they're indirectly starting a war, but Russia's pragmatic in the sense that they don't want a large-scale war. They just want, their area protected, meaning their borders. They don't want NATO with missiles right on their border, because if you go back and Russia has a history of being invaded. So they're quite cautious from that perspective. And so it should be interesting to see how it plays out. And hopefully this video will get posted, because when you say certain words, YouTube doesn't like it. So CPI, you can see CPI has been running down, so inflation is dropping, which is wonderful. What's going on here? I don't know why that took so many clicks. So so inflation's dropping. The issue that we talked about before is there's services inflation, and that's been ticking up, and then it just came in at 7.1. But apparently I didn't internally. The market didn't. The market today actually went up a little bit. So apparently coming in at 7.1 wasn't bad. And I guess I was listening to someone, they're saying how there was a portion of energy inside services, and so it was like skewing the data up. So energy is supposed to be stripped out of services inflation, but it was included. So I don't know if that's skewing things. Morgan Stanley, Wilson, he thinks the market is just irrational right now, and he expects a pullback, saying that it's China's opening up. We got loan growth. It jumped up a lot in January, and this is what we've been waiting for since December. It jumped up as well for money supply increased. And the most important thing is the credit and liquidity in the economy jumped up quite a bit. So the Chinese are obviously pushing money through the system because they're coming out of this recession. They want to open up. COVID's done. Airport traffic, I've been told, is like whoosh, way up. So things are moving in China. And then you got the neighboring countries where things are picking up. I did hear of COVID stuff yesterday, but I don't know if that's true. I didn't validate it. I didn't have time. But the fact is things are opening up. So Sediment, current sentiment is apparently yesterday it was more bearish, and then prior was I'm surprised it changed. But anyhow, so ultimately when we get straight up fear, that's usually buy time. When it's straight up greed, then it's the sell time. So it's an opposite indicator. I'm just gonna follow this for a while. Greed is good. This I pulled from Twitter. The source is this macro micro, but this is just another sentiment indicator where you could look at and see the CNN fear and greed index, and each little spike there's a little arrow, and they tend to coincide with short-term market tops. So it's just, we're kind of at that point. Another interesting thing was it's divergence here, where you see this is looking at the moving averages, and then it's ultimately doing a rate of change on those, and you see the market's up, well that's down. So that typically implies that things might start to weaken or turn over, and there is some weakness in the advance and declining stocks, especially on the volume side. So if you watch volume, so we're likely to get a tech pullback. I mean, it's been going on. Like a lot of tech was off today. Well, a lot of the market was up at the same time. So we're getting a rotation of capital. When the Fed raises rates, it just forces money to move to different areas. And obviously for like people that have debt and loans, they're going to pay more. And so the money leaves them and goes to the banks or the credit card companies. So when rates are raised, ultimately those with wealth or in a good situation benefit the most. So housing inventory, this is old, but I just kept it in here because I think it's just a good reminder, because the housing, or the HOPE acronym, housing, orders, profits, employment. We know housing is still not in the best state. Yeah, it may have improved some, in the last week or so, but it's the Titanic's turning. But with consumer sentiment turning up, and we're seeing some decent numbers in sentiment indicators, you would expect housing to improve, but the problem is interest rates are still too high, so the cost affordability index is such that most people, or there's a lot of people priced out of a home. So if you're moving from New Jersey to Florida, yeah, you could buy a home in some of these nicer communities, no problem, and still have probably several $100,000 cash in your pocket. So it's kind of all relative, but yeah. So the Fed needs rates to drop to really for this to improve, but I don't think they wanted to because they don't want inflation to kick up. So they're purposely like, well, not that they're controlling, but they could sell mortgage-backed securities or buy them, and that will ultimately push the price of interest rates for mortgages up or down. And so they're controlling this lever. They're very they're good. They're tactical. At least this cycle they are. Let's see here. This was last time I presented this. Just a good reminder that don't get too bullish. It's looking at the spreads, and generally when you get the difference between the 90-year bond and a poor quality BBB corporate bond, you can see that once you get down towards zero, historically, yeah, it's interesting. Yeah, then the market typically will crash after that. I think this cycle is going to be a little different. That's the thing. Every cycle is slightly different, but it's good to keep us reminded because the yield curve is inverted and the bond market's usually right. And typically, like during a bankruptcy, like when a company is publicly traded, the shareholders with the voting rights and the type of stock, whether it's common or preferred, will dictate how the company operates. And typically, on average, when a company goes bust, the bondholders take control. And so it's just something to be aware of. And ultimately, bondholders typically drive the market, like historically, meaning once the yield curve corrects itself, the market seems to wash out and then run up. And I've said that over and over. This I put in here because I spent so much time on it, and I'll reiterate. The yellow line is when the Fed began to raise rates, market rallies. You can see it here in 2000, raise rates, market rally. 2004-ish, raise rates, market rallies. 2016, raise rates, market rallies. This time, raise rates, market dropped off, but now we're rallying. So it kind of makes me believe that, I don't know the weighting of the indexes. It really comes down to the weighting. If the weighted indexes are too heavily tech, and I think that's what we're seeing here, is because the weighting of indexes are too skewed towards these big, fat, lazy-ass tech companies. Yeah. That's what's going on. So if this was weighted more towards energy, Canadian energy, but that's not going to happen, you would see us take out the highs. So we always do this every week. The Driggs, that's a new one. So I was reading Riggs post-drilling, and somehow that came out. I could make that a new word. The Drig count. And so it actually increased, but according to someone I was listening to, they said this was just a shift of rigs. I think what they're trying to imply is that the gas rigs were moved over here, but I don't really know. So we'll just keep watching. I got to spend the time to really understand what's at the next level. I have only so much time. And then I threw this in here again just because this is happening. Are we seeing a commodity super cycle? That would be awesome if we were, from a standpoint if you're invested in commodities, which I am. Oh, the list. Oh, look at that. That's not good. So I did mess with this a little bit. So Biden, we had the State of the Union. Biden talked about infrastructure. So you look at Nucor. So Warrior Met Coal is they make metallurgic coal, and that is used to make steel. It's not the dirty coal. So this is a ripe, beautiful company, and it's small though. I mean, it's in the low billions, but it's very attractive. And being the USA, we want to keep, given the current state, we want to control our natural resources. So this is important to national security, and that's what Biden's pushing on with some of these comments. So think about that. Nucor is steel. And then in this list, this Southeast Asia opening, I didn't tweak anything in this, but probably should at some point. Canadian oil, that shouldn't be in there. Surge Energy. So Surge they own a lot of land all across Canada with healthy deposits, and you look at the performance of their stock. It's steady Eddie. It's a very high quality company, and I think it will do quite well over the next 5 to 10 years. And this is my opinion. We're all adults in this room. I'm not trying to, it's not investment advice, whatever that means. My point is, I think that potentially Surge could do well over the next 5 years, but I could be 100% wrong. The Canadian government could come in and put 80% tax on oil. So you got to just look at, think for yourself. But at the same time, I'm trying to leave breadcrumbs, as just like everybody on Twitter, online, they're trying to learn from each other, just get ideas. Just like with the Bitcoin miners, same difference. You may hate Bitcoin, then don't touch it. But if you think Bitcoin potentially is going to be around in 10 years, having these would be an asymmetric bet on that without actually owning Bitcoin, which would be smarter just to own a little Bitcoin, frankly. Actually, since we're on Bitcoin, the hash rate of Bitcoin is at all-time high. So that is, the hash rate is determined by all the computers that are connected together, and they're ultimately securing the network. And as the computers compete to secure the network, the hash gets more competitive as more computers come online. Well, it's at a record high. The Bitcoin price has gotten hit. There's a pretty good gap, and I think that gap, it's massive. I think it's more of a political premium risk gap in the price of Bitcoin. I think that will close to a certain degree. I'm not saying it's going to go way up, but it's artificially too low at current price, without a doubt. I think any sort of analyst would tell you that. So that should close out. Paramount. I need to buy this stock. I don't own it, but yeah, Warren Buffett has a way of doing magic. Then we already talked about Bitcoin. Safe bulkers. I don't know about these bulkers. There's too many of them. Hukipa. They're just a itty bitty drug company that might get lucky. Amgen. They have a new. I discussed that about the pen for asthma, and their fundamentals look good on the surface. Zim, they got downgraded. I don't know exactly why all the analysts, the stock's gone from 80 to whatever, 22, then they downgraded to 15, so it's kind of ridiculous. Qualcomm, and the EWZ, I put short because if you look at it's kind of complicated. It's a currency play, using the currency as a way to look at Brazil. And yeah, I definitely found a probably good for a hedge fund, a little hack. So I got a short signal on it. It's just a reminder for me to check it out. Arch, some more coal names, and that is all she wrote. Okay, where did I go? I'm not on the screen. All right, I'm back. Woohoo! So the favorite part. Who do you think it is this week? Is it orange juice? Who is it this week? I think I should be able to guess since I already looked at this. The fact is, this is a special week, and the reason why is I can't truly say inflation is dropping, and the reason why, I've been focused on the weekly numbers. I look weekly just because I wanted to see what's hot and what's cold. And so let's just talk weekly first. So overall, let's look at weeklies. So the interesting, wheat is only up 0.5% year over year. You would think with everything happening in Ukraine, wheat would be a lot higher. They're supposed to be a big exporter of wheat. But when looking at ag, I'm just quite shocked, because year over year, Like lumber's down 14% for the week. Year over year, it's down 8%. So some analysts could tell me why. Obviously, they're not building that many homes. And so we should see permit data, and that'll be interesting to see if that continues to weaken, because this would imply that they're not building many homes. And then, but the interesting thing, just across the board, year over year, all the ag, so many of them are down. Butter's down 25%, cotton 30%, rubber 22%, oats 50%, palm oil 30%, milk is 14%, sunflowers 20%. The one that is up year over year, potatoes. Do you think you know how to spell potato? If you were president of the U.S., could you spell potato? I'm serious. Is there an E on potato? Now, if you say potatoes versus potato or potato, if you make potatoes plural, does it change how you spell it? Rice is actually up 20% year over year. That's an interesting one. There's got to be a story with that. I'd like to know why. Palm oil. So food ag is actually way down year over year. So what I've been saying, I've been talking weekly. It's been trending up over the last few weeks. Like for the month, we got coffee's up 21, wheat's up 6. They've come back a lot though. I don't know. It's like I'm just shocked. I thought there was more inflation. It's like, what the hell? So then we get into the industrials. It's similar. I mean, we got a few of them that are up a lot, but nickel's up 12%, aluminum down 25%, palladium down 33%, lead is down 10%. Yeah, it just goes on and on. Cobalt down 45%, moly, I'm not sure what that is. It's cut off, but that is up 100%. I wonder if it's in soda ash, 18. All right, I'm getting long-winded now. Livestock, this is important. So livestock for the week is actually one of the few that I do see inflation pressure. Year over year, everything is up a lot. Salmon, eggs. Salmon's 40, eggs are 28 year over year. But it's really the only group. If you look at the CRB index, this commodity index, as well as the S&P GSCI index, both of those year over year, CRB is up 5.5%. GCSI is up 6%, and that's kind of what inflation's running at. So maybe we should just use these two metrics as our inflation gauge. I don't know if it's that easy. Likely not, but so then when it comes to electricity costs, Spain was up 3% for the week. Germany. Down 7, up 22% year over year. Yeah, so as we get into the winter, it should be interesting to see how well prepared the Europe is and what happens with Russia, because there's going to be rubber's going to hit the road here at some point. And so that's basically it. So summary is I'm getting more moderately bullish on just seeing inflation starting to come down. It truly is. And so as long as we don't get a big kick up in inflation in the second half of the year from China, I think we might be able to get lucky on this and without too much damage. So if I was a investor, which I am, but if I was not me, but a different investor and I was advising them, I would say, given that the yield curve is inverted, you still want to be cautious. But, if you're going to see a nickel on the ground, you probably would pick it up. If you saw a dollar bill on the ground, you'd probably pick it up. So we're in a situation where you probably could pick up nickels and dollar bills for some of these really healthy companies that don't have a high valuation, but are flowing with the momentum of what the President of the United States is focused on. The Fed is focused on holding rates steady, while Biden's been clear that they're focusing on spending money on infrastructure and chips and this and that. So we should see more of infrastructure spending coming out. And there's more talk of having a pseudo government private type investment philosophy where the private sector is involved with the government and trying to push investment decisions in the U.S. because we've been so externally focused towards, not really investing in the U.S. So they're sounds like they're actually going to do something and kick up investing in the U.S., but the private sector will be involved. So there's a lot of positives going on right now, and so for that reason, you should be positive too. Just in general, it's always healthy to be positive. That's it for this week. For next week, we'll rock and roll again. Not a lot of change over week. You heard the market kind of, and that's all I have for today. Green Bicep out. Thank you for your time. Cheers.